Marc Cohodes, a renowned short seller, developed skepticism over the offshore cryptocurrency exchange FTX and its CEO, Sam Bankman-Fried. Despite the company's public acclaim and claims of profitability, Cohodes identified potential red flags in Bankman-Fried's strategies, including buying failing crypto operations on the brink of bankruptcy. Cohodes couldn't directly profit from shorting FTX, a privately owned firm. However, an indirect method presented itself through Porter Collins, co-founder of Seawolf Capital, who advised Cohodes to examine Silvergate, a California-based bank catering to the cryptocurrency industry. Sam Bankman-Fried's testimonial on Silvergate's website solidified the link between FTX and the bank. In 2022, after several crypto exchange and hedge fund collapses and weeks before FTX filed for bankruptcy, Cohodes shorted Silvergate's stock. This move proved advantageous when the bank's stock plummeted by 40% in early January, following the announcement that over $8 billion in deposits had departed in the wake of the FTX debacle. Cohodes, with the help of another short seller, James Gibson, collected information on Silvergate's crypto exchange customers, some of whom had suspected ties to money laundering and criminal activities. They relayed this information to federal banking regulators, the SEC, and the Justice Department. The shared details sparked legislation to control money laundering in the cryptocurrency industry. After Silvergate, Cohodes focused on Signature Bank, another financial institution with substantial ties to potentially risky crypto operations. His research into Signature Bank's suspicious dealings was submitted to the Federal Deposit Insurance Corporation. Cohodes' persistent pursuit of financial transparency led to significant impacts on financial markets and lawmaking. His efforts and predictions regarding the downfall of Silvergate and Signature Banks brought him recognition from his peers and regulators. Both banks underwent federal investigations for suspicions of money laundering and were seized by the FDIC in early March. Despite the decline in hedge funds specializing in short selling, some, like Cohodes, continue to yield significant returns. Cohodes' endeavors, despite controversies and setbacks such as the collapse of his hedge fund Copper River Partners in the 2008 market crash, demonstrate his resilience and commitment to unveiling fraudulent practices. Cohodes also engages with his large Twitter following to raise awareness about corporate fraud. His aggressive social media behavior, however, has provoked backlash from his targets and even supporters. Notable incidents include an FBI warning against violent threats following his controversial tweet about Parker Petty, a CEO of a company he shorted, and his ongoing lawsuit against MemeDex, who he accuses of discrediting him. Despite these controversies, Cohodes has earned a measure of respect in the finance world for his work in exposing financial misconduct. He continues to investigate suspicious activities in the crypto industry, with his current focus on Cross River Bank, another institution involved in crypto transactions. Though some characterize him as a divisive figure, he remains unapologetic about his aggressive approach.